We've got Tony Rubo here from Briggs Subaru in Topeka. Now, last time you were here a couple of weeks ago, we were talking a little bit about the inventory shortage situation there is in cars. It had to do with the chips that the CPU, like computer chips, not like Doritos, that they're having a hard time getting enough of to be able to produce the cars at the manufacturer's level. And so one of the things that you guys were doing at that time was doing this trade-in and trade-up deal where people could actually bring their cars in and get a better car, but their value of their trade-in was really high because inventory was so low, and all car dealerships, Briggs and all the other ones, are in a heavy need to have inventory to be able to sell something. So, for people, it was probably one of the best times they could have to be able to get the best value out of that car. Well, that was 2 weeks ago, so I wanted an update. How is that actually going? Because it's got to be near the end of it by now.
It's actually, it's going really well. People are really excited with some of the deals they've gotten. Yesterday, a lady that had her car for a year was in service, and I'm just talking to her, and she's like, well, can you look at my car? And I said, well, sure, I'll go look at it. And she's only had it a year, and tomorrow morning she's getting her new Subaru Ascent. So, it worked out for her, and she was really not expecting to even think about getting another car for a while. People that are, we're calling all the people that are in leases currently that still may have a year or so to go, calling them. We got 2 of those this week where they came in and traded for about the same payment they had and traded up almost 2 years, got the same payment, and drove a new Subaru home. So the trade up event's really, really good. It ends on Saturday. And then, we'll have new programs for Subaru. As far as the new goes, the inventory's starting to come in a little bit heavier. I can see some things changing. I've already seen things changing where we had 0 for 63, now we have 0 for 36. So I can see the manufacturers pulling away from the 0 a little bit. Even your domestics have pulled away from rebates because there's not a reason to fund it with 0%. There's just not enough inventory out there to have to do that. So if the 0% is important to you, now you got 3 or 4 days to get that taken care of. So just come in and, we're even happy to give you a free appraisal on your car. You don't have to buy anything. We'll give you a free appraisal. If you really just kind of want to know what your car is worth, we're happy to do that for you.
Is it true what they say, by the way, that one of the best times to go to a car dealership is when the weather's bad? I was just thinking about that because I just read the weather and it's 100% chance of rain tomorrow. Would that actually be a good day to go visit? Because
it is.
Yeah,
it is. The crazy thing about that is it's when it's raining, pouring rain, we're busy. The only thing that doesn't work weather-wise in Kansas, 40-mile-an-hour winds keep people away from the car dealership for some reason. We could have rain, torrential snow, name it, and we'll be busy. But wind, it just doesn't happen.
And of course, hail is the one thing you fear the most. Not because of people not coming in, because you just don't want your inventory damaged.
Not anymore. No, You don't. No, you don't want hail.
Yeah, that's one of the worst. But I'm not seeing that in the forecast. That's the good news. Heavy rain and maybe storms, but Hopefully we'll stay away. You never know, but hopefully that won't be a problem. And then Friday and Saturday look like gorgeous days to be going to a car dealership. In the 60s and sunshine.
Well, it's a good time to get your new car and enjoy the holiday weekend coming up.
Absolutely. All right. So, and you mentioned that that you would appraise cars. A lot of people don't know that you'd actually not just appraise it; you'd actually buy it outright. You don't have to buy a car from you for Briggs to buy somebody's car. If somebody I went through a period of time where I had I have one person, but I had 2 cars. I had a smaller car that I drove around. Anytime I was going in the city, and then I had a larger, SUV type. It was an old Jeep Cherokee that if I needed to haul stuff around, I would, drive it. And people in that position, this is a really good time to unload one of those, because you're going to get the best value out of it.
Yeah, if you're local, Lawrence, Topeka, just come see me at Briggs at Subaru in Topeka, and I'll be happy to give you a number on your car. I bought 2 cars yesterday from some people. And I guess as the ambassador for Briggs today, if you're in Manhattan and you want to sell your car, just go into any one of our locations in Manhattan. They'll be happy to give you a number on the car that they'd pay for it. It's a simple process. It takes 15 minutes. And we are, like I said, I bought 2 cars yesterday from some people. So it helps build our inventory, helps give our customers more opportunities to buy something different that we might not normally have.
Do they have to fully own the car to do that, or if they still have payments or stuff to make, can they still?
No. So if there's equity, what we'll do is we would write one check to the bank to pay off your note, and then of course the balance would go back to you.
Right. So don't let it keep you away if you
No.
still have a car loan on it. All right. I mean, if you're too far underwater, you might not want to do that. But for anybody who's had a car, long enough that, and like you said, with the value going up, this especially if you have a loan on it, it might be a good time to see what kind of, whether maybe you thought you were underwater, now you're not anymore.
There's a high possibility of that right now.
So that's really good. And is there any expectations that people should have when they come in and do that? Because one thing I know that when people are looking to sell something is a lot of times they'll go in with some sort of a figure in their head, and if they don't get it, they feel really disappointed about it. So to be realistic, if they perhaps say, for example, go online to look at what they think the value of their car might be, what should they be looking at?
Generally, like KBB,
Yeah.
and a lot of customers do that.
Yeah.
Yesterday, one of the ones I purchased was exactly that. They came in and said, this is what KBB says. Now, keep in mind, when you rate your car, so you can go in and kind of get an appraisal right on my website. But when you do that, you have to be honest about
Right.
what you're doing. Now, the hard part is you can't tell KBB as you're doing it online that it's got a dent in the left fender, or you're driving on completely bald tires.
Right.
Those are things that are costly that you have to add back to the value.
Right. They just ask you for a general condition.
Correct.
But it's they don't really give you a whole lot of guidelines as to what makes which condition. And a lot of owners tend to overestimate what their car's condition might be. But the other thing too is that that they also give you numbers based on a trade-in value or a private sale value or an auction value, and you don't want to go into a car dealer expecting to get a private sale value, because it's just not realistic.
No, it's not. And I can say, Joel, for the most part, our job's easier now working car deals with customers because they're pretty educated when they come in. Here's kind of what KBB says, and then you go out, we look at the car together and you go, oh yeah, I forgot that, my wife backed into that trash can a couple weeks ago and dented that fender. But okay, so that's a few $100s, and we just adjust for it and make it work. So it's so much easier for a customer to buy a car today. That everything's pretty much laid out. I mean, the information that you have access to is the exact same information I'm using to help bid your car.
Yeah, that is one of the big changes in the car business from say 20, 30 years ago. The idea of things like Carfax and other stuff that people have access to that they never used to.
Absolutely.
And like you said, they know pretty much what you do. And of course the just visual inspection of things too. Although, like you said, you can sometimes gloss over stuff as a car owner that you forget about.
It's personal to you, so
Sure.
you kind of think it's more because it's yours,
Now, you did talk about the fact that a lot of car buyers are educated now, and they are. One of the areas that I think, though, is still causing an awful lot of confusion in people is still the idea of leases. You mentioned before that you were able to have people that had time on their lease come in and upgrade their car. And I'll bet there are a lot of people out there that have car leases that didn't know they could do that didn't know that when they have a term on their lease, they probably figure they're stuck with that term, that if it's a 2-year lease or a 3-year lease, I got this car for that period of time. I can't just get another car a year into it or something like that. But obviously you can.
Oh, absolutely. Yeah. I mean, you have to keep in mind that the lease is just another obligation in writing that says, here are the parameters. Those parameters, you can trade out of your lease day 5 or day 155. What you do when you come out of the lease is you open up yourself to what the market is on your car. Part of the reason why you lease is because you have a guaranteed value of your car at the end of your lease. So when you come out early, you forgo that part because now you want to try to do it now. So you're open to, you take the total of the payments you have left and that guaranteed value, that acts as a payoff, and then you compare it to what the market is, and you can either trade or you can't. Just like if you had a 72-month agreement and you came in 3 years and said, I want to trade. We get a payoff and we look at the market. Works the same way.
Right. So just again, to be clear, so that people that are listening, because it's sometimes it's hard. You're driving around, you're listening to the radio, and you may or may not really understand. So let's say somebody comes in and they're going to buy or lease a car, and the car's a $30,000 car. and you give them a 2-year lease, they're going to establish at that point that in 2 years they're going to buy the car back for, let's say, $20,000, just to make the math really easy. And so that means that over the course of that time of the lease, you've got $10,000 of payments to make, basically, with some other finance that goes into it.
Well, yeah, they're not giving you free loan.
Right.
Yeah, the lease isn't free.
No.
But the difference from the lease is you're looking to pay for the use of the car.
Right.
The confusion for most customers is I'm trying to get equity. Well, they depreciate with every mile.
Mm-hmm.
So catching up with equity is almost impossible, especially when you take it and put it on a 6-year term or sometimes 8-year terms. And I had a bank offer me 10-year terms.
You're talking about in a sale.
Yeah. And once you finance it for 6 years and you want to trade in 2, that makes a very difficult math problem.
Right, because you haven't, if people understand the way loans work as opposed to leases, you're paying the most interest in the beginning of the loan, because at that point, you're paying a percentage of whatever you owe, and so the amount you owe is highest at the beginning of the loan, so the amount of interest you're paying is the most at the beginning of the loan. So that means over the beginning of the loan, the first 2 months, 3 months, 6 months, a year, you're building less equity than you will on the, say, last year of the loan. The last year of your loan, almost everything you're paying is principal, and you're just paying it off, and you have the most equity you have. The first year, it's mostly interest. So if you trade that car in after a year, the value of the car has dropped well below the value of payments you've made on it in general for a loan.
Yeah. Well, keep in mind, in the purchase, you're paying $3,000 on $30,000. You're paying roughly $30,000 or $3,000 in sales tax, adding on top of your loan.
Yeah.
Okay. Then you've got the profit that the dealer made added in there. So when you start, it's pretty tough to trade. Mm-hmm. So the last thing we want to do, I have to commend our policy at the dealership. Mr. Briggs is really strict on this. Actually, we have meetings on it. We actually have a meeting about how long each customer financed their car for. And if they do it for 84 months, I have to explain that to Mr. Briggs why. He does not want his customers in 84-month loans, period. We always try to put them in the shortest term possible with the most down payment to get equity the fastest they can. Because the last thing we ever want to do is tell the customer we can't help them when they come back.
Yeah, right. And so when it comes to a lease, like you said, that the idea about the lease that is, for most people, the most appealing is that they've already established what the value of that car is going to be at the end of the lease. There's usually some terms, like, for example, you can only, get to a certain mileage limit or something like that over the course. And you can establish whatever that is. If you're a person who drives a lot, you set that number high. If you're a person who doesn't, you can set that number low.
100%.
Yeah, and so on and so forth. Well, the reason why I bring that up is that for people who got a lease, let's say last year or 2 years ago, at the time they made that lease, when they tried to figure out how much the car was going to be worth when the term of the lease was over, we're using math that doesn't apply right now because, like you said, the value of cars are higher now, of used cars, than they were before because of the lack of inventory. So that means if you had a lease that you got a year ago, the established price, you could probably do better than that. Yep. When you come to you. That's why it might be a good idea to get to redo a lease at this point.
Right. That's part of the protection you have in a lease. Because think about it, if the market was the other way, Joel,
right,
and gas was $5 a gallon, and they gave you a market value 3 years earlier, and now you get $5 gas, that car's not anywhere near worth what they guaranteed it to be.
Right.
The good news is you give them the keys and the manufacturer takes the loss.
Right. And well, that was the other thing I was going to say. So this is a good time if you already had a lease to come in and redo it. It's also a good time if you don't have a lease. If you had a regular car, whether you own it outright or have a loan in or whatever, and you wanted to do a new lease, the amount they figure on the value of your car that it's going to be in 2 years is still higher now than it will be, let's say, 6 months from now if you tried to do a lease 6 months from now.
Oh, no question. I've been doing this for 42 years. I've never seen a market like this in 42 years. Never. This is the market for the customer. The other thing is I want to be clear. I'm not here promoting that you should do a lease. I'm here promoting the idea that you should consider one because, like we were talking, when you do a mortgage, you look at a 15-year, you look at a 30, you look at what mortgage options are available to you before you decide because it's a big purchase. This is the second largest purchase you'll ever make. So why not look at your options before you make a final decision? A lease may not work for you at all.
Right. But it's one of the options you definitely need to consider. Tony Rubo from Briggs Subaru in Topeka. Always a pleasure. And let's have you on again next week, okay?
I'll be back.